Things investors ought to be thinking about right now. Stocks surged and bond yields fell as inflation numbers came in lower than expected. But is the market getting ahead of itself? Crypto exchange FTX ran into big trouble this week, and rival Binance backed out of a bailout deal. Bitcoin and the entire crypto sector felt the heat. And speaking of heat, FTX is also in a $135 million deal to name the Miami Heat's basketball arena. Why you should never invest in a company that's buying stadium rights. On the Barron's Roundtable, my colleagues Ben Levison, Carlton English, and Andrew Berry. So, Ben, pretty good week to have a 401k. Stocks soared. Investors want to believe that elusive pivot is on the way. Are they right?
No.
Oh, still not right.
Jack, this market really wants this pivot. I've said it again and again, and every time we get a data point like this, it overreacts. It extrapolates too much from one data point into what the Fed may or may not do. And so I don't want to downplay this number. It was a great number. This is what the market needs to see. It needs to see inflation start to slow, and that seems to be what's happening. At the same time, the moves were just enormous. The NASDAQ had an 8% gain this week. We saw stocks like Home Depot and home builders jump more than 10% in one day. The moves are just massive, and I think it's a little bit overdone.
So what do you see as the path of inflation? This is only one data point. Can we believe that inflation really has peaked and is on the way back down?
I think we can believe that inflation has peaked. I think the going down is the part that's the question. It's likely going down, but it's going to be how fast is it going down? And is it going to go down fast enough for the Fed? Is it going to find a lower level and then pause there? And I think that's what investors really need to be careful about.
Okay, and what are you looking for to get the signal that, yes, in fact, it's headed down?
Well, obviously, the other inflation readings, we need to see more than one. But I'm also going to be looking at the job market because I think the Fed will be worried about inflation as long as the job market remains as hot as it is. Okay. So that's where I'd be looking. Okay.
We had an election last week, if you might have missed it, but it did happen. And that was how important for the market?
Not at all.
Okay. Finally, some earnings coming next week that will give us a bit of a peek into the economic future?
Yeah, I mean, we'll be watching retailers. We're finally getting some big ones. We had some small guys like Ralph Lauren report this week, but we're going to get Target, we're going to get Walmart, we're going to get Home Depot. And I think they're going to tell us a lot about how the consumer is doing, how inflation is still coming through in things like food and whatnot, and just a little bit more about where the economy is going.
Okay. One person who may have to change his budgeting, rein in on his spending a little bit, Carlton, is Sam Bankman-Fried. He did a neat trick. He managed to take his net worth from $16 billion down to below $1 billion. Not many people lose $15 billion in a week. Well, what happened?
A lot of things happened. So what's interesting about this story is FTX was kind of considered one of the so-called grown-ups in the crypto space. We saw a number of crypto companies have trouble. Some even filed for bankruptcy earlier this year. FTX had been kind of the lender of last resort to many of those companies. But it emerged through a report from CoinDesk last week that an affiliated company of FTX's, actually much of its balance sheet was kind of comprised of these tokens that FTX created. Generally not a good idea. Other reporting showed that there was evidence that FTX was commingling its clients' accounts to do trading through this other business as well.